Good evening and welcome back to the weekly docket. I'm your anchor for Informant Market Desk, and if you are just tuning in or if you've been away for a bit, let me remind you what we do here. We don't deal in opinions. We don't deal in the breathless speculation that fills the hours between market open and close. We deal in the truth social ledger. Every post, every burst, every spike in volatility is recorded, measured, and weighed against the cold, hard arithmetic of the market. Tonight, we are looking at the week of July 20th through July 26th, 2026. It was a week that felt less like a political cycle and more like a stress test for the entire ecosystem of digital attention. We had 445 posts generated across the platform this week alone. That is noise, pure and simple, but it's noise with direction. More importantly, we saw 26 bursts fully finalized this week. 26 moments where the signal cut through the static, where a cluster of activity forced its way into the tape, demanding that capital react. Let's start by framing the atmosphere. What was the arc? The week didn't explode in a single day. It simmered, then spiked. We saw a consistent drumbeat of posts leading up to the midweek close, a period where sentiment seemed to be holding its breath. But the real story wasn't just in the volume, it was in the velocity. When the bursts did fire, they didn't whisper. They screamed. And the market, as it always does when the feed gets loud, had to decide whether to listen or look away. We are going to walk through that entire week, post by post, move by move, verdict by verdict. But first, let's lock in the registry for this week's data chain. For those of you keeping a physical log or checking the immutable ledger on your screens, note the head of this week's registry chain, 9149D-9-6F0DB. That is the anchor for our data. Keep that number in mind because when we talk about truth, precision is the only currency that matters. Now, let's look at the week in posts. The volume was high, but the content was specific. We had 145 posts this week. A significant chunk of that activity wasn't new information. It was rehashing old wounds, amplifying existing narratives, and trying to create friction where there was none. But amidst that clutter, the bursts emerged. And when they emerged, they carried weight. The market doesn't care about your follower count. It cares about liquidity and volatility. And this week, volatility was the guest of honor. We saw traders waking up to gaps that defied the overnight calm, positions being unwound before the opening bell even rang, and a general sense that the rules of engagement had shifted slightly from buy the rumor to sell the news, or sometimes just sell the noise. The arc of the week was defined by this disconnect. The feed was shouting about victory, defeat, chaos, and order, while the tape was quietly calculating the cost of those words. Let's move to the numbers. This is where we separate the signal from the noise. You want to know what moved. Here are the top measured moves for the week. And I'm going to read them exactly as they stand in the ledger because rounding is a sin I will not commit tonight. First, look at VIXI, the Volatility Index Fund. It opened with a gap up of plus 5.58% versus the prior close. That is a 100th percentile of its overnight gaps. In other words, that was the biggest overnight jump we have ever recorded for this instrument in our database. And then it closed the session with a total move of plus 4.57%, which lands in the 77th percentile. Let me repeat that. VIXI plus 4.57%, 77th percentile. Opened plus 5.58% versus prior close, 100th percentile of its overnight gaps. And we see that data point listed twice in the packet, a testament to how singular and shocking that opening gap was. It dominated the early session. It set the tone. The market woke up terrified, or at least highly alert, and VIXI paid for that fear with a massive premium. But it wasn't just volatility. We had moves in DJT, the Donald Trump media and technology ticker. And these were not minor adjustments. We saw DJT down 3.26%, which is a 90 percentile move. It opened down 1.20% versus the prior close, an 82nd percentile of its overnight gaps. Again, listed twice for emphasis. DJT minus 3.26%, 90th percentile. Opened minus 1.20% versus prior close, 82nd percentile of its overnight gaps. The sell-off was steep and it started before the opening bell. But wait, it gets more volatile. We saw DJT climb back up 2.53%, a 93rd percentile move. Then just as quickly, it dipped again by 2.41%, a 92nd percentile move. And then, finally, it rallied 2.32%, another 92nd percentile move. To put that in perspective, DJT plus 2.53%, 93rd percentile, followed by DJT minus 2.41%, 92nd percentile, followed by DJT plus 2.32%, 92nd percentile. This was not a stock trading on fundamentals. This was a stock being tugged on both ends by the gravity of the feed, whipped back and forth in a span of hours, defying standard technical analysis. And then there was another VIXY move later in the week, plus 2.63%, hitting the 97th percentile. The volatility wasn't gone. It had just moved to a different sector or time frame. But none of that compares to the burst of the week. We had 26 bursts this week. One stood out above the rest. It was the 11th burst. Let's look at the metrics. 13 posts over 48 minutes. That is density. That is intensity. In those 48 minutes, 13 distinct bursts of activity from the feed triggered a measurable reaction in the market. The result? IWM, the Russell 2000 ETF, dropped 0.73%, which is a 76th percentile move. 13 posts, 48 minutes, less than 1% drop in the small cap index. It sounds small, but in the context of percentile moves, it was significant. It showed that when the feed concentrates its fire, even the broader market feels the tremor. Now we need to address the human element, the punditry, because numbers are cold but pundits are hot. And this week, we had a pair so spicy, so fundamentally opposed in their reading of the room, that it forced us to highlight them as the spiciest pundit pair. On the left, we have Margot Kessler. She didn't hold back. She said, "He's literally celebrating arson while pretending it's a vacation photo shoot. I want to be very careful about how I say this, and then I'm going to say it anyway. He is out of his mind." That is the view from the sideline. Horror, disgust, a sense that the rules of reality have been suspended. On the right, we have Dale Buckhorn. His counter was pure instinct over intellect. He said, "The anchor tries to count the flames, but I don't need a percentile. I've got a gut. It's beautiful chaos, and unlike the tariff segment, we're finally winning." He didn't care about the gap up in VIXY. He didn't care about the drop in DJT. He saw the noise as victory. This clash defines the week. One side sees chaos and calls it madness. The other sees chaos and calls it power. The market doesn't care which one is morally right. The market only cares that both sides are trading on the same information, and they are trading at cross purposes. And now, ladies and gentlemen, the jury returns. This is the centerpiece of the show. This is where we judge not just what happened, but who was right about what happened. In previous weeks, the jury has voted, tallying up crowd sentiment against market verdicts. But this week, the docket is clear. There were no jury votes that closed this week. No jury votes closed this week. That means there is no aggregate accuracy figure to report for the jury this week. The packet states it explicitly. No jury votes closed this week. We cannot compute a number we do not have. We cannot estimate a verdict where there was none. So for this week, the jury's role is suspended. The market spoke, the feed shouted, the pundits screamed, but there was no official jury tally to weigh against the tape. It leaves us with only the raw data, the gaps, the percentiles, the burst counts. So, what does that mean? It means we are left with the pure mechanics of the week. The 126% moves in DJT, the 100th percentile gap in VIXY, the 13-post burst that moved IWM. These are the only truths we have for this week. No jury to tell us who was right, just the tape telling us what happened. And so we turn now to the booth. We've read the numbers, we've looked at the bursts, we've stared down the spicy punditry of Kessler and Buckhorn, but data is only half the story. The other half is interpretation. How do our colleagues in the booth make sense of a week where VIXI opened with a historic gap, DJT whipped SOD with 90 percentile swings, and a burst of 13 posts moved the Russell 2000? They've been watching the tape while we've been reading the feed. And here's what our two colleagues made of it all. Margot calls it arson. Dale sees beautiful chaos. Let's see what the booth makes of this volatile swing and whether the gut check holds up.
Margot Kessler. He's literally celebrating arson while pretending it's a vacation photo shoot. I want to be very careful about how I say this, and then I'm going to say it anyway. He is out of his mind.
Dale Buckhorn here. The anchor tries to count the flames, but I don't need a percentile. I've got a gut. It's beautiful chaos, and unlike the tariff segment, we're finally winning.
Margot warned of madness. Dale trusted his gut. The VIXI closed at 77th percentile, a sharp left that proved neither full fire nor total victory.